Hello, I'm Matt Simon, Senior Analyst at TABB Group, and I'm joined today with Steve Grob, Director of Group Strategy at Fidessa. Steve, we have some mutual interest these days. We've both been focusing on the FCM industry. The economics of the business have been really kind of tough over the last couple of years. We've seen near zero interest rates, tough execution in terms of the volumes. But more importantly, the workflow of how people are transacting and the businesses that they're involved in is changing. You've been focused a little bit on in your work and some of the papers that you've been writing, one that's coming out actually this month. You've been looking at the buy-side workflow and how that's changing. Can you tell us a little bit more about that?
Yes, we have, and you're right about the FCM world being fairly challenging. But what we started to do was to say, let's look at the beginning of the food chain in terms of what the buy side's thinking about all this stuff. In particular, the convergence of OTC and exchange-traded workflows and how people are going to aggregate across all of those.
So is that a challenge for the buy side in terms of thinking about the products that they're going to trade?
I think it really is, because at the minute you can see an initial state where they're using whatever screens or platforms they've been using for years and years, but you can see that they're very soon working out that that's not going to be adequate.
And on the FCM side, we've been seeing that the desks have also been converging. You have the rates and the OTC desk kind of collapsing. Are you starting to see the same from some of your customers?
We are, and there's an interesting human dimension to that in terms of it seems to be the people in the firms that are most acceptance of the changes are the ones that seem to be doing much better in all of this.
So in terms of workflow, you know, what are some of the hiccups? I mean, where do you see some of the hurdles that need to be overcome?
So I think there's two fundamental areas. The first is that you can see how the world of OTC and exchange traded products are going to be converged into a world of standard and custom products. And within standard, you're going to have futures, swap futures, constant maturity futures, and probably a whole bunch of products we haven't thought up yet. And then more customized products. And then I think the second area is you can see that firms are wanting to think about how they can look at their margin positions in terms of back office and use that as a way of making better trading decisions up in front office. And that's like putting the whole workflow into reverse.
So we have different costs that are associated with the positions that you're going to trade, nothing really specifically new, but the new element is that the margin part of it is really going to be a big factor for the buy side.
So you may be looking not just at price as the basis for making a decision to trade one contract or another, but really trying to get your head around the clearing efficiencies and where a particular contract might clear. May be the definitive reason why you choose to trade that product rather than another one. And
so for Fidessa, is there something that you guys can bring to the table in terms of aggregation, or how do you kind of help to solve some of those challenges?
Well, I mean, you're right, Matt. It's all going to be about aggregation, and I think that's really the key to all of this. And it's not just at the front end, but all the way through the different steps of the workflow. You're going to have to be thinking about what you're doing in terms of gluing together different types of standard contracts.
Right, and so for the sell side, how are they thinking about some of these challenges in terms of which products that they're going to offer?
Well, again, I think it's interesting. Services. I mean, it's interesting because you can see a spectrum between perhaps the more future-centric firms that are looking at futurization, swap futures, and then the more traditional OTC execution houses that would perhaps favour CEFs and standardised swaps. So there's a very broad spectrum of opinions out there.
Yeah, I mean, in terms of our paper that we put out in the FCM industry, when we spoke to the leading FCMs and we asked them about when do you think this is going to occur, most expect over the next year or two as swap portfolios start to transition over, they're going to start thinking about futures and look-alike type products. Do you kind of think that the same timeline applies for?
Yeah, I think very much so, because you've got issues around compliance, understanding what some of these new products and contracts are. And I think there will be a rush of new things and new technologies that come out. But I think the winner at the end of the day is going to be the firms that manage to think it through correctly.
Okay, so final question. I mean, in terms of the buy side, when do you think they start to think about these challenges?
I think they're thinking about them already. When do they start changing their business workflows and procedures? I think that's a process that starts to happen through 2014 and beyond.
Okay, great. So this was Steve Grob, Director of Group Strategy at Fidessa. I'm Matt Simon, Senior Analyst at TABB Group. Thank you for joining us.
Thank you.